Michael Burry has been buying Nexstar for 2 quarters in a row. So today we will look at the 5 bull and 3 bear theses on this company to figure out why. First, let's start with what Nexstar is. Nexstar Media Group is a major player in the American media landscape, owning and operating 199 television stations across the United States. As we can see here, Nexstar reaches the largest number of U.S. population through its stations affiliated with major networks like CBS, Fox, NBC, and ABC. Nexstar provides local news, sports coverage, and community events to millions of people. Through many years of cord cutting, traditional TV business overall is definitely shrinking, and this is an obvious bear thesis on Nexstar. However, if we look at the detail, some players in the industry are still thriving because people still love to watch their contents. For example, local news, which Nexstar has the #1 position in, is a part of media landscape that is maintaining strength despite the overall industry shift. Nexstar leverages this by providing high-quality news programming, extensive local sports coverage, and engaging community events, keeping viewers connected to their local communities. In addition, Nexstar has invested in its digital platforms like websites, mobile apps, and streaming services. Now let's dig deeper into Nexstar's business, which has 4 revenue streams that might tell you that this company has a better business than what one would expect from an average TV company. First, there is advertising revenue. This used to be about 90% of Nexstar's revenue more than a decade ago. However, rather than just relying on the TV advertising, the management successfully diversified away from it.
Second,
As we can see here, retransmission revenue, which is the distribution fees paid by cable and satellite providers to carry Nexstar contents on their platform, has been growing at a steep rate. As we can see here in the most recent revenue breakdown, the distribution revenue now takes up 52% of total revenue and growing, versus the 35% advertising revenue shown in gray. So the large portion of stable cash flow from the distribution business, which is also growing, can be considered a reason to invest in Nexstar. The third revenue stream is digital revenues, which contains strategic investments in online platforms like The Hill and other mobile apps. This portion is small at 8%, but is growing. Last but not least is the political advertising revenue. And as the politics in the US is becoming more and more divisive, the upcoming 2024 election cycle is expected to be a boon for Nexstar. Political advertising spending is projected to reach $11.6 billion in 2024, and Nexstar is poised to capture a significant share of this spending as the largest local broadcast TV group. So this short-term boost in the company profit in 2024 can be the second bull thesis on Nexstar. Nexstar in financial numbers. Here are the 3 charts that show Nexstar's financial strengths. This graph shows that the company's revenue and operating profit are growing over the 2 decades, during which TVs are supposed to be dead. But because this company grew through multiple M&As, the total revenue and profit numbers might be misleading, but the purple line, which shows operating margin, proves again that this company has decent economics. In addition, the long-term ROIC trend also shows that this company has good economics. And I didn't show the ROE graphs because after tax numbers, it shows more fluctuations, but its recent average is above 20%, which is very good also. And lastly, the company generates stable and growing cash flow. There is year-to-year fluctuations because the political advertising cycle has 2-year cycles, with presidential elections every 4 years, but the upward trend is quite evident. So high ROIC and strong cash flow generation can be the third bull thesis on this company. However, not all is rosy at Nexstar, and one financial issue is its debt-loaded balance sheet. As we can see here, Nexstar borrowed much money to acquire assets and grow, and currently sits on about $7 billion of net debt. And even though it is paying down the debt, recent interest rate increase is hurting the company. As we can see here, the effective interest rate has risen from 3.6% to more than 6% in less than 2 years recently, and this could go up a bit higher as the effect of higher rates roll in the 4th quarter. And although the management doesn't seem so worried at the moment, the falling interest coverage ratio like this is definitely something investors should keep an eye on. And this looks like the second bear thesis on Nexstar, and unfortunately we are not finished with the bad news. Here are some key takeaways from the 3rd quarter result. Total revenue was $1.13 billion, which is down 6.7% year over year. Breaking down this in the 4 segments, distribution revenue was down 6.7%. Political advertising also decreased, although, as we explained before, this is due to the political cycle, where the odd number years have lower number. Third, the core television advertising declined 2.3%. And lastly, the digital revenue was $99 million. This is up 15.1% year over year, but is still very small portion, and the acquisition of CW contributed here. And the increased interest expense also negatively impacted the bottom line in the third quarter. Some bright spot was that the fall of distribution revenue was due to the blackout period during the negotiation period with DirecTV, and without this, the segment revenue would have increased 8.8%. But even then, the disappointing short-term result can be considered the third bear thesis on Nexstar. Another note on the short-term prospect: the Nexstar management claimed that the Disney charter agreement, which was announced in mid-September. However, this is just a projection, and there is no evidence that this deal is helping Nexstar yet. We will wait to see how the shift in media deals impact Nexstar. Considering everything we talked about so far, Nexstar seems to be a good business despite some shortcomings. And where does this company currently trade at? First, looking at the EV to EBITDA multiple, its current 7.2 times indicate that it's trading well below 10-year average, and the conclusion is quite similar. When we look at the EV to free cash flow multiple here, if we look at its dividend, the dividend yield is just about 3.5%, which is not terribly interesting, especially in this higher interest rate world. However, as this dividend graph shows, the dividend growth is quite attractive. Since starting its dividend in 2013, the company has grown its dividend by an annualized rate of nearly 25%. Despite such growth, its dividend still only eats up about 20% of earnings, or about 17% of operating cash flow, so it can probably keep up with this growth rate in near future. And if that's the case for the next 5 years, then the dividend yield for the investor will reach about 10%. So the low valuation of the company, which can be seen through the multiples it trades at and also through dividend yield, can be considered the fourth bull thesis. But that is not all with Nexstar, because after spending about 20% of its free cash flow on dividends, the company is spending more than 4 times of that amount on its share buybacks. And thanks to the low stock price, the company's number of shares have decreased by more than 20% in the past 5 years. If we calculate the expected return in purchasing Nexstar stock, it comes out to be about 17% per year. But if we include the share buyback assumption, the expected IRR increases to more than 25%. So I believe the management's very smart capital allocation strategy, which is aggressively buying back shares when the stock is trading at a low multiple, could give a boost to shareholder return. And this can be considered the fifth bull thesis. So overall, I believe Michael Burry invested in Nexstar because it is a decent business, and despite short-term challenges, it has other short-term boost factors like the 2024 presidential election and aggressive buybacks that could result in positive result. Okay, that's it for today, and thanks for watching. If you want to keep up with what super investors are doing and why, please click the like button below and subscribe to the channel. Thanks, guys.